Welcome to Your Weekend View, where we bring you the latest insights and trends in real estate investing. I'm your host, Daniel Brereton. Let's talk capital calls. If you're an investor in private commercial real estate, you've likely heard of them, and you might even have participated in one. For many, the words conjure up these images of sponsors coming out with a hat and asking for more money. But that's not the complete picture. A capital call can occur due to a combination of factors, and we've observed most requests for capital lately coming in one of two buckets. First is the high cost of debt, and second are the effects of inflation. Today's environment, with floating rate debt tied to SOFR jumping from near zero in March 2022 to 5% by late 2023, it's created acute financing pressures that weren't anticipated when many deals were structured. Consider this. A sponsor who secured an all-in rate of 4% back in 2020 might now face financing costs that have doubled. Now, a lot of sponsors purchase rate caps to prevent rates from getting too high, but when those expire and need to be replaced, we're now facing replacement costs that have skyrocketed. What once cost less than $100,000 for 3-year protection might now cost $3 million for the same amount of protection. This isn't necessarily a sign of poor management, and it doesn't necessarily mean an underperforming asset either. It's often a function of macro forces colliding with deal structures that made sense at the time that the deal is underwritten. Smart sponsors don't just issue capital calls. They sometimes structure the capital request as a member loan, where investors can earn an attractive rate of interest for the period that the loan is outstanding and have that loan repaid before equity investors get any contributions repaid either. The key distinction is timing and purpose. A capital call to fund cost overruns on a development project is different from a capital call designed to weather a refinancing in a tough capital market. Both serve the same goal, which is preserving and maximizing long-term value. For investors, the lesson isn't to avoid deals with capital calls, it's to understand them. Why is the capital call being issued? Read the operating agreement, know the terms, and understand whether you're looking at potential dilution or a structured loan, and what protections exist for your capital. You can learn more about commercial real estate investing by reaching out to ir@equitymultiple.com or by visiting our website, equitymultiple.com, to learn more about our investment offerings. So thanks for tuning in. Stay disciplined, stay diversified, and we'll see you next weekend.